Hello, everyone, and welcome to this new series of the ASEAN webinars from Climate Bonds Initiative. We are waiting for a few minutes for people to join in. We have more than 270 people registered for this webinar, so it will take a minute or two to get everybody to join in. Please bear with us. Thank you. Okay, let's get started. I am Cedric Rimaud, the ASEAN Program Manager of the Climate Bonds Initiative. Good afternoon and good morning for everyone joining us today for this new series of the ASEAN webinars. This session is very particular. We are very fortunate to have three representatives of investment management companies across Asia, which represent the leading forces behind the investment population for the bond market. So with us today, we have Mr. Tetsuya OISHI from the Government Pension Investment Fund of Japan. We have Mr. Jeff Groh from UBS Asset Management in Sydney, Australia. And we have Mr. Dashran Zhong from Huaxia Bank Asset Management from China. Thank you very much, the three of you, for joining us today. So I will start with Mr. Oishi-san, please, from the Government Pension Investment Fund of Japan. Could you please give us a brief introduction on the funds that you are representing today? I understand that they represent 1.6 trillion US dollar of assets. This is an extraordinary number. So can you please briefly explain to us how these funds are invested?
Happy to. Thank you. My name is OISHI Tetsuya, Managing Director of Investment Strategy at the GPIF. And firstly, just for your information, Japanese used to call their given names first, followed by the family names in English, in line with the Western culture. But from this year, the government requires public servants to call their family names first, and followed by the given names in line with the Japanese culture. So OISHI is my family. Tetsuya, no, it's okay. Tetsuya is my given name. So Tetsuya is not first name in Japanese, but by the way, so given the time constraints, I have to go back to the introduction. GPIF stands for Government Pension Investment Funds, but we do not manage pension funds for public servants, but for employees in the private sectors. The assets under management it's about 1.5 or 1.6 trillion US dollars, depending on the exchange rates. And the allocation is equally split into four asset classes, namely 25% for Japanese fixed incomes, 25% for non-Japanese fixed incomes, 25% for Japanese equities, and the 25% for non-Japanese equities. We manage some Japanese fixed income funds by ourselves, but outsource all of non-Japanese fixed income investments to external managers. And we are mandated to delegate investment discretion of the equity portfolio to external asset managers because lawmakers were concerned our in-house equity investments would have had an undue influence on the management of private companies given the sheer size of our AUM. Thank you.
Can I just ask one question on how you select your fund managers that you're working with? You give them an investment mandate. That means some guidelines. Are they broad or are they specific in the way you ask them to deploy your assets?
I would say quite specific and detailed investment guidelines are given to asset managers.
Okay, thank you very much. Now let's turn to Mr. Jeff Grove from UBS Asset Management in Australia. Jeff, could you please give us some background on your operations, please?
I'm a portfolio manager with UBS here in Australia. In Australia, we are a relatively large investor and with assets under management in excess of $26 billion. Within that, more than $2 billion of our assets under management are in green and sustainable strategies, which probably makes us one of the very largest institutional investors in the green bond market here. We manage money on behalf of third-party clients, largely institutional clients, pension funds, insurance companies, as well as operators here in Australia. So we have incorporated ESG considerations into our investment process. So we don't run a standalone green or sustainable mandate. The green bonds that are in our portfolio, all of those $2 billion, are just interwoven within the portfolio construction process.
Thank you. And what is the trend currently on those assets that you're managing? Are you seeing a strong growth, or is this growth quite steady?
The growth is relatively steady. I think for our green bond, the portion of our portfolio that's in green bonds, the Australian market's only been under $20 billion Australian dollars as a market, and we as an asset manager have started from zero as well, and are now over $2 billion of that. So it's been a strong growth pattern for the market as a whole, and for us as an asset manager. But as I say, it's not because we're acquiring dedicated mandates. It's just that we are taking a proactive stance in terms of making green investments important in our investment process.
Thank you. So now to Mr. Dachuan Zhang from Huaxia Bank Asset Management. Could you please introduce your institution?
Cedric, can you hear me well? Hello?
Hello?
You can hear me?
Hello, sorry, we cannot hear you. Hello? Okay, never mind. Before Mr. Zhang can rejoin, let's carry on. Mr. Oishi-san, can I please ask you, how do you judge the current state of the green bond market, maybe globally, but also in Japan and in Asia? We have seen strong growth over the last few years. How do you judge this growth?
Yeah, as you have said, so we are seeing the strong growth of the green bond market these days, albeit a little bit slow growth this year because of the coronavirus. And so big surprise is that the many governments decided to issue sovereign green bonds. And currently, the European governments are the main issuers, but some emerging countries are following suit. And unfortunately, Japanese governments so far, have not issued green JGBs, but we hope our governments will issue the green JGBs in the future.
But Japan is the second largest country in Asia for the green bond market. What is the local situation in the domestic bond market in Japan? Do you see many issuers, corporates, or local governments as well participating in this growth?
As I have told you, governments are, not willing to issue the green sovereign bonds or green local government bonds. So the mainly private companies are eager to issue green bonds. But the issue is the dearth of the green projects in Japan. And the Minister of Environment encourages Japanese private companies to issue green bonds by subsidizing the issuing costs. But again, the issue is the number of appropriate projects in Japan.
And the regulation has been changing as well, right? For the infrastructure of the market, there has been some guidelines initially issued by the Ministry of Environment, and these have been revived as well. Do you think the development of the regulation is conducive to a healthy green bond market?
Yeah, so yeah, the Japan's Minister of Environment published the Japanese version of the green bond principles, and it is encouraging news, but to be honest, it is not the strong driver for the market.
Jeff, over to you. The Australian market has already seen quite a bit of issuance, but in preparing for this call, you were telling me that most of it is from the government or local government side. Can you give us a little bit of an overview?
Yes, I think like in Europe, the market here was kickstarted by the supranationals. So the World Bank was the first issuer in the domestic Australian market with a 5-year green bond. That has encouraged others. So we have other names that people would be familiar with: KfW, the Asian Development Bank, the European Investment Bank. So they are regular issuers in the Australian bond market and have been very strong supporters of the green product. In addition to that, 3 of our state governments have all issued green bonds. So New South Wales, where I'm from at the moment, Victoria and Queensland have all issued green bonds in one form or another. And the largest of green bonds in England is major banks have also been big supporters of this. So each one of the 4 major banks here in Australia have issued green bonds. We had one just mature a couple of weeks ago from ANZ Bank. At some point they'll come back, but they're very well funded at the moment. And what that's meant is that our market has got a lot of issuers in terms of the number, but in terms of the sectors, it's still very, very dominated by governments and government related. The sovereign government here has not thus far issued a green bond. The 3 of the largest states have, and the way our market works is that it's very bank dominated. So a lot of the corporates actually will obtain financing through bank loans, and that's what some of our green bonds and other sustainable investments are actually financing. It's renewables on the bank's balance sheets. We've had a couple of corporate deals here in Australia. So a property trust has issued a couple of bonds to support their green buildings, and some of the universities also issued sustainability bonds, which introduce sort of elements of green as well as social projects. So we have a large number of issuers, but if you look at the $8 bond market in green terms, it's still very, very government related in that respect.
And because this market is driven by the definition of the use of proceeds, are you able to are you told what is the ultimate use of proceeds, for example, from governments or financial institutions? Are you sensitive to that, or is the labeling enough for you to choose what a green bond is?
It really depends on the issuers. So for the government entities, they're one of the individual projects that they are financing, whether that's low carbon transport, renewables, water, and so forth. For the banks in particular, there's aspects of commercial confidentiality there, so they can provide us the sectors of the portfolio that we'll be financing. They can provide sort of aggregated statistics, but they can't tell you who the individual borrowers are, given the commercial confidentiality. That's perfectly fine as far as we're concerned. You know, we're looking to finance these activities, so we don't, and we want recourse to the banks. We don't necessarily want recourse. So we're quite happy with how the reporting is done in Australia.
And in terms of the frameworks that issuers use, I guess now there is quite a wide choice of reference. You have the Green Bond Principles, you have the Climate Bond Standard. Sometimes in specific countries, there is a local definition as well. Are you sensitive to these definitions?
I think the frameworks are all evolving. One thing that Australia has done is not try to develop our own domestic framework. We've leveraged the CBI principles and the Green Bond Principles quite heavily. Are very happy to issue under those principles, and the more bonds that come to market, the more investors are just familiar with those principles. So I think we would do ourselves a disservice if we actually tried to develop something domestically when there's so much richness out there in terms of the frameworks. One thing we are seeing is a greater adoption of the SDG framework and trying to fit green bonds into those areas that relate to climate in terms of the UN SDGs, and that's an evolution that many of the issuers that initially started with bonds or just standard green bonds to expand the framework a little bit and give themselves a little bit of flexibility to issue across the spectrum. So that's one of the more recent developments we've seen in Australia.
And Mr. OISHI, in Japan, is it similar that you see the issuer selecting different types of framework and maybe using the sustainability framework as well?
As far as I am concerned, many Japanese issuers adopt e-commerce green bond principles. And also as I have told you, the Ministry of Finance, Ministry of Environment, published guidelines of the green bonds for Japanese markets.
Yes, but when you're selecting asset managers that are external from you and you give them a mandate to manage your asset on your behalf in green bonds, they then have the choice, especially for non-Japanese green bonds that are issued globally. Are you sensitive to the kind of frame of reference that these managers are using?
So basically, we encourage asset managers we hire to adhere to the e-commerce principles, and also that we are a little bit concerned about the number of guidelines and the principles in many countries, and sometimes the EU has recently published taxonomy. And also some countries have different principles. So so we hope there will be some coordination among different principles and guidelines in the future.
But as a global investor, would you say that there is a risk of confusion between these standards, or it's normal that different areas of the world are adopting slightly different standards?
Yeah. So we.
Hello.
Hello.
Yes, we can hear you.
Oh, okay, finally.
Sorry for that.
Sorry, guys. I tried.
Sorry, Mr. OISHI was speaking. Can we please let him finish and then we'll pass on to you?
Of course.
Thank you.
Okay. Yeah, as always, there are different, rules in the markets, and gradually, those rules are converging into some one, broad rules, and I hope the green bond markets will follow the same path.
Okay, thank you. So let's turn back to Mr. Dachran Zhuang from OISHI Asset Management. Can you please introduce your institution?
Okay. Sorry, guys. I have had quite a lot of trouble logging in. And sorry for the disrupting Mr. OISHI. Huaxia Bank is one of the biggest commercial banks in China, and I'm under the asset management business line, and our AUM is a little less than $100 billion US, which make us one of the top asset management asset managers in China. And mostly we invest in fixed income products like credit bond and many other kind of debt investment. And we also have AUM on stock and index. And ESG strategy is one of our strong fields in China. I understand that it's a very well developed outside China, and China is catching up lately. And we have our proprietary ESG evaluating model, and of course we have our share of the green bond market in China. And me myself, I have a portfolio in green bond and also other kind of credit bond and social bonds. And also I helped our department developed the ESG stock index with the China Security Index. I think that's for now.
So this focus on ESG from your institution, would you say that it's driven by a change in regulation, or this is a decision by your bank in terms of standing out in front of your clients?
So the motivation for our bank or our department to adopt a ESG strategy is, I think, both ways. The regulator, the government is promoting the ideology of green finance and also sustainability and also SDG and all that. And but there's no mandate, or we are not compelled to do it. Our senior management, our board see it's a good time to adopt this strategy. So we kind of started ahead before other banks and asset managers in the field to do this. So it's kind of there is a up-down power. Or the upside down, top down power to do it, but we did it voluntarily. Yes.
Okay, and in this ESG framework, how much important is the green aspect or the environmental side?
Well, as ESG is three parts, right? E is only one part of it, and especially in China, as you can see, I'm not sure if you are familiar with the green bond taxonomy in China. As I understand, the international or the CBI way of doing it is more focused on climate change. As a developing country in China, we not only focus on climate change, we also focus on the anti-pollution things. So to answer your question, I think in our own ESG model, E is very important, but it takes maybe 1/3 of the total index or data inputs. But we think it's very important to the whole reading system.
And I was asking earlier the other panelists what they think about the state of play in terms of regulation or taxonomies that exist in the world now. Do you feel that because there is various ways of looking at green, it could be confusing, or do you think it's actually quite normal and you're happy, for example, with the domestic taxonomy in China?
Well, I can speak only for myself that I think people maybe started with the or understood the idea from green, but I think it's better that we take this as a bigger theme. I think the maybe sustainability is more proper to describe or a better idea to follow for investors, and I think green cannot cover it all. That's my personal opinion.
Understood. Now, if we look at the breakdown of green bonds that are being issued in Asia, there is a very strong focus on buildings, green buildings, on renewable energy, and on transportation. I would like to ask any of you, do you think that this is enough? These are sectors that are interesting from an investment point of view, or there is a need to expand beyond those three sectors? Anyone?
Yeah, so in terms of the Japanese markets, I think another potential source maybe the wind turbine on the sea, because so far the issuance is focused on solar panels or green buildings, but some power producers are interested in the wind turbine on the seashore. So I think it's gonna be one of the promising.
I'm asking the question because we did a survey among European investors, and one clear outcome of this survey is that investors are looking for more diversity out of green bond issuers. I don't know, Jeff, do you have a view, even though corporate issuance is relatively small in Australia, as an investor, would you welcome issuers from new sectors?
I think most definitely, the few corporate ones that we have had have been related to buildings. So the REITs that I'd mentioned, as well as the universities that have been doing this for green buildings. Within the banks, though, each of their own portfolios was relatively diverse. So when we look at the different bonds that the banks issued, they were backing different things. So we do have some that were some wind farms, for example, down in Victoria, and others that were just focused on other types of renewables. So when I look at that in totality across all of the green bonds that we own, we do see that each of the issuers is bringing something slightly different to the table, which is actually quite encouraging. We saw that with our state governments as well, that each one of them was financing something slightly different. But of course, from a corporate bond development thing, there are many different things that we could still be looking for. So yes, more issuers, more diversity in terms of the use of proceeds, absolutely welcome development.
And how is it in China? What is the state there? Because there is a lot of investments in many corners of the economy. So is it reflected by a greater diversity of green bonds being issued?
Well, I think the majority of the green bond in China, the majority issuers are banks. I think it's the same case in many other markets. I think one reason for that is it's always easier for financial institutions, especially banks, to issue any kind of bond. And another issue for China is that in the past few years, the many subsector of the anti-pollution or climate change related industry is suffering a very bad revenue, which made it very hard for them to issue any kind of security. So they are recovering, and they are our faith in those sectors are also trying to recover. And about more diversity in issuers, I think it's always a good thing. But I think this how can they really issue green bonds? Both depends on the taxonomy methodology and also their credits, their fundamentals. Yeah.
Now, when we hear about a new bond, a green bond being issued globally in many different markets, we hear of very high interest from investors. Very often, the book building leads to a multiple of investors coming to ask for these bonds compared to what is on offer. How do you explain this interest in the primary side? Jeff, maybe?
Sure. We've certainly seen it with the corporate bonds in particular. So one of the corporates that issued one of our large supermarket chains, for instance, which had worked, Woolworths, who had worked very closely with CBI to develop standards for green bond issuance from the supermarkets. They did a really small deal, but the name is a household name. There had been a recent vanilla bond maturity, so there was money that was in the market that was looking to go back into the name. To have a corporate green bond was fantastic development for us to see, and for Australia to actually be able to work with CBI to get standards for supermarkets globally was a wonderful thing. And as that book build came, so there were a number of factors that sort of meant that the demand was very strong. The deal was relatively small and modest in terms of size, and the book was very, very large. What we did find was that all the investors that had put into the book were then asked to verify green credentials to the issuer themselves. So we had to essentially just tell them why we were investing here, what our underlying clients' intentions were, and those sorts of things. And that was a rather interesting turn of events that the issuer then used some of that information to make allocations in what was a very massively oversubscribed deal. So it was a big win, but it was very, very interesting that the issuer had to basically rank the investors that were coming into the book and decide where they would like to allocate those bonds.
And Jeff, when you are considering a new green bond coming to market and it's overly oversubscribed, do you think it's still a good value proposition compared to the other bonds that have been issued by the same issuer?
Yeah, it really depends upon the issuer. So for us, if it's a corporate bond, there's really not going to be many comparables. So if you did want the name or you wanted the label, then you would probably stay with the book. For others, it really is ultimately becomes a relative value decision. So we assess each one of the bonds that come to market in terms of the pricing, in terms of the tenor, in terms of the issuer, the credit rating, all of the normal metrics that you would use to analyze a normal corporate bond, and that sort of filters through into our investment process. If the book is going to be very oversubscribed, then you just have to take that into consideration.
Okay, and how is it in China? Is it also oversubscribed when a new bond comes to market?
Still, it depends on the issuer. If it's a financial institution, maybe there will be oversubscribed, but there won't be any other special treatments. It's just the bidding. If you give the better, if you have a better bid, maybe you can get the bond. There's no ranking about how green the investor is, and because on the asset management side, we have a higher required rate of return, so we do not invest too much in the risk-free or invest in financial institution bonds. When we look at corporate bonds, we don't see much oversubscribed. We didn't see much oversubscribed last year, but this year with the coronavirus, with the COVID-19, the liquidity in China is quite abundant. We see more oversubscribed, both on green and non-green bonds.
So you would say that it's no difference between the green and the pandemic bond, for example. The interest from investors is the same. I would say for the general market that is the case. Okay, understood. And Mr. OISHI, in terms of Japan, when you invest your own funds, obviously you represent a very large pool of capital to deploy. So your allocation into new issues must be very important for you to be able to invest your capital. So do you think, is it the same that the bonds are heavily oversubscribed as well?
Yeah, same here in Japan. It depends on the issuers, but in general, demand is greater than supply compared to the plain vanilla bonds. And yeah, as you rightly pointed out, given the supply demand dynamics, so therefore we decided to formalize a partnership with 10 multinational development banks and the 5 DFIs to provide the preferential access window to the green bonds issued by those MDBs and the DFIs to our asset managers.
Thank you very much. So there is a question from one of our audience. Would you prefer green bonds that are 100% allocated to green projects, or do you treat equally those which are less than 100% allocated for green projects? But I guess that depends on the country, because it's probably allowed in China, but in international markets, the framework requires 100% allocation. Maybe Mr. John?
That is true. In China, in the Shanghai exchange, they allow if your revenue is I think according to my memory, if 70% of your revenue is green, then you can issue green bonds. It doesn't matter if you have a green project. And to answer the audience question, would I prefer a pure green project green bond or a less or a mixed green bond? Of course, maybe the impact of the pure green bond is maybe better, maybe bigger, but I still need to look at the amount of the total project, the absolute impact to the society, and also I don't think we should only look at the projects. We should also check the ESG performance of the issuer. If we are looking at a issuer with a very low ESG performance, even though it has many green projects, I wouldn't probably will hesitate in investing the bond.
And someone is asking another question for you. There is still a vast majority of green bonds in China that are issued without any third-party verification. Do you see this trend as changing?
Actually, I saw the PBOC, the People's Bank of China, our central bank, have jumped in regulating this. They have issued maybe a rule to regulate all these the green tagger, the green rating agencies to regulate them. Before that, there's no rules on how these green bond raters should perform. And also, although there's no mandatory green rating before you do green bond issuing, most of the bonds are rated on whether they're green or not. And I think there's another problem with this. Not many investors, I don't think not all the market, the bond investors understood how the green bonds rating system works. I mean, maybe they just invested in some credit bond, whether it's green or not. If that's the case, it doesn't matter to the investor if there was a verification or not. But for me, as I have studied the regulations thoroughly, I will look if it's verified or not. So it's a question about how well you understood the mechanism of the green rating.
Okay, understood. Jeff, can I ask you the question? Are you sensitive to who does the verification when you're presented with a green bond?
No, generally we'll take sort of the major verifiers that are out there. Again, I just sort of hark back to earlier comments that Australia has not tried to develop any particular standards itself or take its own approach. It's very much been sort of focused on the global approach. So no, the choice of verifier is not really of a major concern for us as long as we're familiar with the names and we've seen them before.
And you have your own in-house analyst to review the greenness of each issue?
Absolutely, yeah. We have a dedicated sustainable investing team within UBS Asset Management globally that reaches across all asset classes. So they're independent of the portfolio managers such as myself, and they provide sort of the framework and a lot of the research support for us in terms of alignment with standards, how green is the bond, how green is the issuer, their credentials, and so forth. They interact very closely with our credit research analysts as well to develop our own proprietary ESG scoring. So all of this sort of comes together in a recommendation to myself and other portfolio managers globally about whether to participate. And then once we have participated in a green bond, that ongoing monitoring and verification that what we bought is still exactly the same sort of thing, even if the loans or some other assets underneath it have been substituted, that we're still satisfied with the greenness of the underlying.
And is there any instance where you have declined to invest in the primary of a green bonds because of the greenness of it, or in secondary, maybe later when you have reviewed the use of the proceeds, you have decided that this was not what you expected?
Yes, there's been some primary issuance here where the issuer has issued, say, a green tranche and had other tranches sort of separated from that. We struggle a little bit with that because you still don't have direct access to those green assets. So if the assets are maturing at different schedules, for example, you are ultimately commingling green assets with non-green assets. So we've had some problems with that, but we've never actually declined to participate on the greenness of the issue. There have been really instances of greenwashing in the Australian market. Again, just given that it's very, very heavily dominated by government issuers who are incredibly transparent about what they're looking to do, but we have declined just some primary issues because either we didn't like the sector or we thought the pricing was too tight relative to alternatives. So there's many and varied reasons why you would decline to participate, or you may actually sell a bond after you have participated. But we haven't had any negative experience in terms of assets not being what we thought they were at inception.
Thank you. Mr. Zhang, in China, is there any cases where you have looked at green bonds and you've decided not to participate on the, because of the non-greenness in your own judgment?
Well, for me, I haven't met this kind of situation.
You think the verification is strong enough so that it gives you a level of assurance that you can safely invest in them?
The thing is, for me, it's already hard enough for me to find a green bond that meets my return requirements, my duration requirements. So I rarely turn down my opportunities.
Okay, understood. Now we have a question from one of our audience saying that China and Japan are doing a wonderful work in the sustainable finance and innovation. How do you see securitization playing a role in both green and social finance? And China is doing a great job in this sector, but do you have any views on that?
Okay, it's another question for me. Okay. We are trying to, I think, besides green bonds, we also have a lot of social bonds. Well, it's not named social bonds. We have like bonds that target to fight poverty. We have bonds that has a label says it's for the fight for the COVID-19. We have bonds that serves that serves the One Belt One Road project. So we have a lot of innovations And also I have been discussing with people from the industry that they are developing new bonds that's linked to the sustainability performance. And
but what about securitization?
Yeah, I think we are. Yeah, I've actually invested some ABS and ABS on green ABS. I've actually invested some of those. I think it's quite easy for corporate to issue these bonds, and the investment bankers are quite familiar with the terms. It's quite convenient. I'm not sure that.
Thank you very much, Mr. Oishi. Is it the same in Japan that you have some securitized deals that are bringing green assets to investors, or is it yet to be developed?
As long as I know, we haven't seen many securitized issuance in Japanese markets.
And do you think this is an area of growth for the future?
I think so, because green bonds are pari-passu to the plain vanilla bonds, even though the proceeds are segregated from the other sources. So for high yield issuers, I think they have a motivation to segregate green projects to the SPV and issue the securitized green bonds in order to enjoy the low financing costs.
Jeff, do you have a view from the Australian point of view about securitized deals?
Yeah, there have been some securitized deals that have come to the market. So some of those sort of tranches that I was mentioning before, particularly in the residential mortgage space, it hasn't been a 100% green deal, but there may be one or two tranches that have come those proceeds and are going again to houses with solar panels or other renewable parts to that. So it's a welcome development, but again, it's relatively small in the scale of our market.
Thank you. Someone is asking on our audience, how do the panelists find the liquidity in the secondary market for green bond, the ease of buying and selling? And Mr. Zhang, you said that sometimes you struggle to find the right securities to invest in. What about buying it from the secondary market?
Because as an asset manager from the banking industry, we have a big appetite, and that can most of the case we can only find the right amount to invest in the not in the secondary market. So we try to find some green bonds in secondary market, but for corporate bond it's very hard to find. For financial bonds, financial institution bonds, it's easier, but I do not see a green spread, a green premium in those bonds.
What about you, Jeff? Do you think that, I mean, do you often buy from secondary as opposed to only primary?
Look, we will do both. We prefer to try and get set in primary, which is where you can get your largest allocations. But the topic of liquidity sort of cuts both ways. People wonder about secondary trading and spreads, and is there the green premium, and can you do this? Our view is that if you are supporting this market, you should really support in primary to start with, because that's where you will get your biggest allocations. Invariably, we will get scaled, as we've discussed. There's often subscription levels, and then found is that if you need more, you should be trying to get those bonds almost straight on the break, because then it becomes rather difficult. There's lots of discussions that we've had over the last few years about liquidity in the secondary markets. The bonds don't trade so much, they're a bit hard to value and so forth. I find that a sort of a two-edged sword, because if I got enough in primary or I got it early enough, then I'm set with what I want, and I'm not really concerned as to whether the bonds are trading a lot in the market or not, particularly if we on average own 10% of virtually every line, given our market share. What I will say though on the flip side is that if an investor generally buys and holds a large proportion of our green bonds, if ever we need to sell them, there is always buy-side liquidity on the other side, because the bonds are scarce, and there are willing buyers that will look to take them. So if we're flipping out, or a client has a change of strategy or something like that, I've never had any concerns with the bid side liquidity in being able to sell the bonds. But if you are just relying on secondary and are not prepared to do your work and step up when the primary deals come, then I think you find it a bit more difficult.
Mr. OISHI, do you have a view on the liquidity in the secondary markets?
First of all, so given the size of our AUM, so we mainly invest, buy green bonds in the primary markets, and we are not concerned about the liquidity in the secondary markets, because the investor base of the green bonds are different from the investor base of the plain vanilla bonds, and many investors, hold the green bonds until maturity, and ironically, because of the illiquidity of the green bonds, some green bonds are resilient to the bear markets, and we witnessed the resilience of the Italian green bonds in the European sovereign debt crisis. And Mr. Jason Mortimer of the Nomura Asset Management wrote the good reports, which is the included in the CBR reports. So I recommend audience to read it there.
And if those green bonds are relatively difficult to source in secondary, is it your expectation that actually the pricing will be better if you hold on to a green bond, because there will be investors looking for them anyway? So there is a debate out there whether green bond outperform in the secondary as well. Do you have a view on that?
Yeah, in terms of the bear market because of the credit crisis, then I think on the market to market basis, then they are resilient.
Jeff, do you have a view on that?
Yeah, I think you observed that the green bonds trade generally richer than comparable bonds in the secondary market, and that has many people sort of concerned about paying over to get them and so forth. I think it's just purely a function of demand and supply. That if the major investors that want to own these things and buy and are not actively trading them, then that just is a scarcity premium. What I will say is that I generally observe that the bonds, once they're issued and after maybe sort of 2 months or so, they generally find their home in their natural place. So the natural investors that would hold them generally have got what they needed to find. There won't be many trading on the street. And then that scarcity premium just means that the bonds will trade richer. Again, if you got set in the primary market at flat to the curve, and now they're trading 5 or 6 basis points through the comparable curve, then that scarcity is actually a positive for you as an investor, because those bonds have outperformed and they probably stay rich until they mature.
Mr. Zhang, how is it in China? How is the situation in terms of the performance, the secondary market performance of green bonds? Do you have a view on that?
Well, I want to follow up on Jeff about scarcity, because I don't think there's enough green bond investor or just green bond funds that's big enough to drive a scarcity premium. So for the general investor, the green bond is just another bond. So I don't think there's a very strong link between whether it's green or and the lower coupon or to maturity rates.
Okay.
But I did see in academical papers that says for green bond investors, they always get a lower issuing coupon. But that could also due to green bond issuer are bigger firms or better issuers. Yeah.
Okay. Now, there is a strong growth outside of your three markets. In ASEAN, we have seen a doubling of the amount issued last year in terms of green bonds, and there's quite a big diversity across countries. So there is quite a lot of issuers coming to market. Among your three institutions, Mr. Oishi, you are the only one which has a direct involvement in non-Japanese or non-domestic markets. What would you say for those issuers outside of Japan that are looking to issue green bonds? What would be your recommendation for you to get interested in their green bonds?
So are you asking about ASEAN, or are you asking about
ASEAN?
Yeah, our main performance benchmark for non-Japanese fixed income portfolio is the World Government Bond Index provided by the FTSE Russell, which unfortunately includes only Malaysian ringgit among ASEAN currencies. So first of all, ASEAN fixed income market as a whole must grow to be included in the main fixed income indices. Then the markets, there are green bonds to Japanese investors.
Now, if you project yourself maybe 10 years from today, how do you expect the green bond market to develop? Do you expect a continuous strong growth? And if so, in which part of the market?
Yeah, I believe the markets is keep growing, and some governments in ASEAN countries issues are green sovereign bonds. I think those sectors are promising sector in the future.
Jeff, do you have a view on the future growth of the green bond market?
I think we're the majority of the world is still committed to the Paris Accords, so the issuance will still be coming to support that over time. What I expect to happen, though, and we're seeing that in the Australian market, is for many issuers to just broaden their framework, and sustainability seems to be the term that everyone's sort of focusing in on now. So green is an important subset of that, but I think more issuers will be looking at a broader sustainability framework and a part of that.
And I guess there are some companies that are brown by nature. In Australia, it can be, for example, mining. These companies are looking to transition to the green economy. As an investor, how do you look at this transition?
Yeah, it's a very interesting one, because for Australia in particular, obviously there's very heavy reliance on fossil fuel and commodity exports that are not necessarily going to be the most green things. Many of the mining companies, though, just don't fund themselves from the bond market, so we don't really see the likes of BHP or Rio Tinto or others actually coming to the bond market for financing. So a lot of their interactions in terms of sustainability and transition and so forth will be either with their shareholders, with their global parents, or with the banks themselves. So we may find ourselves indirectly supporting transition by underwriting bank issued green bonds, for example. And of course, the banks can't tell us exactly who the customers are behind those loans. But it's certainly a broader topic that Australia has embraced. There's a lot of discussion at the moment about sustainability-linked products. It's happened in the loan market. It's not yet happened in the bond market, or public bond market, but that dialogue is ongoing.
Understood. Mr. Zhang, how do you project yourself in the next 10 years? How would you say this green bond market is going to develop in China?
I think green bond will keep growing as it has been growing for the past few years. But I agree with Jeff that the definition of green bond, or I should say, it will evolve eventually to sustainable bonds. And I think in the meantime, our investors will also evolve. Maybe more investors will understand more about sustainability, about definition of green, and also the taxonomy, and they will investing in the future with more ESG factors considerations.
And what about the regulatory environment in China? There's already some moves towards harmonizing the domestic taxonomy with the global standards. Do you see, and you also have different regulators regulating different corners of the system. How do you see that evolving?
I think we are trying to catch up with the world's standard, and even though we have different, we have a very complicated regulating system. I think they are trying to move in the same direction. And actually, there's the new taxonomy for China's green bond market shows that they are converging to the international standards. I think they will act more actively to give us a better, clearer standards and a more efficient green bond market, hopefully.
Okay, thank you very much. Unfortunately, this is all the time we have for today. Thank you very much for joining us. I would like to personally thank our three panelists who represent very significant pools of assets to deploy in the green bond market with their insights. And thank you very much. It was very enjoyable to discuss with you today. Next week, we will be having another session, this time focusing on the Philippines, where we will be discussing with some key actors of the green bond market within the Philippines on how to develop this market. Please join us, and thank you very much for today. Thank you again to the panelists, and have a good day, everyone. Thank you, Jeff.
Thank you.